Welcome back to TechKidFX for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, which at the time of this recording is trading above the 20-day MA here on the 4-hour chart. We have also managed to get above our key area of resistance at around the $133.2 mark. We have also fully maximized our target areas to the lower side in the formation of this wave 2, and I believe whatever we are seeing at the moment is the start of a bounce to the upside in the formation of this wave 3. And before I get further into the technical analysis and also give you my next price targets here on the Quant chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that after seeing the all-time high, we started the bear market where we had been seeing lower prices in this ABC corrective structure in a move that gave us a low at around the $40.1 mark, and after seeing the bear market low, we started a massive bounce to the upside in a move that had been obeying the Elliot structures, where you can see that I have this Elliot structure in blue, having the wave 5 making its peak at around the $229 mark, and also completing the formation of that larger Elliot wave count 1 to the upside. And after seeing the formation of a larger Elliot wave count 1, whatever we expected next is a corrective structure in the formation of a larger Elliot wave count 2, which is a corrective wave, and because of its corrective nature, we also expected to see that ABC corrective structure having the wave C fully maximizing the formation of that wave 2. And after seeing the low for that second wave at around the $94.4 mark, whatever I'm expecting on the long-term scenarios is a bounce to the upside in the formation of that wave 3, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $401.9 mark, and that is the minimum that I'm expecting Quant to do on the long-term scenarios. And in the formation of that wave 3, which is an impulsive wave, we also expect to see a 5-wave structure in formation within the formation of that wave 3. And initially here on the charts, I had a different Elliot wave count that was playing out, where I was terming that as the first wave to the upside. Then we saw this corrective structure in the formation of that wave 2. Then we saw that wave 3 giving us a peak at around the $165.5 mark. Then we started a corrective structure over here in the formation of this wave 4 in a move that has retraced too much into the wave 1 high. And then I was expecting another bounce to the upside in the formation of that wave 5. And because this fourth wave retraced into the wave 1 high, that made me to change scenarios, because a fourth wave to the lower side should not retrace into the wave 1 high, and having done so, that invalidated the Elliot wave structure by breaking the Elliot wave guidelines, and because of that I had to change scenarios and also come up with a different Elliot wave count that I have here on the charts at the moment, where I'm terming this as a 1-2 setup. So this is a 1-2 setup. Then we started this Elliot wave structure that I have right here, having this as the first wave to the upside, giving us a high at around the $165.5 mark. We have also retraced in the formation of this wave 2, giving us a low at around the $126.7 mark. And using the Fibonacci's to get to see whether the second wave has done the minimum that we expect a second wave to the lower side to do, by connecting the Fibonacci's from the low of the first wave to the high of that wave 1, that gives me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, and I can mark that target area here on the charts like that, which is a target area that we have fully maximized. And since we have managed to get above the 20-day MA, also managed to break above the key area of resistance at around the $133.2 mark, then there are chances that whatever we are seeing at the moment could be the start of this bounce to the upside in the formation of this wave 3, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $229.4 mark, before we can expect a retracement in the formation of that wave 4, then push even higher in the formation of that wave 5. And that is what I'm expecting here on the short-term scenarios. And for that move to also play out, we need to continue holding above the key area of support at around the $133 mark, continue pushing even higher to our next key area of resistance at around the $147.9 mark, and the moment we manage to break above that key area of resistance, then I'll be expecting to see a retest, and once the retest is in, then we can continue pushing even higher, give us a break above the wave 1 high at around the $165.5 mark, and that will be enough confirmation that whatever we are seeing over here is the start of that bounce to the upside in the formation of that wave 3, and we can be able to fully maximize our target areas in the formation of that larger Elliott wave count 3. So that is what I'm expecting here on the short term scenarios, and that is a first case scenario that I'm expecting to play out. And we also need to have a worst case scenario, because we need to be prepared for both scenarios, bullish and also bearish, where we can term these as an ABC corrective structure, having these as the wave A, then a wave B, then a wave C, giving us a peak at around the $165 mark. And in case that is the case, then we can expect a break below the key area of support at around the $133.2 mark, continue pushing even lower, get to our next key area of support at around the $110.9 mark. And in case we lose that key area of support also, then that will be suggesting a different Elliott wave count, where we can term this as an ABC corrective structure, and the movement that will be playing out over here could be a 5 wave structure in formation to give us one more new low in the formation of this larger Elliott wave count too. But as long as we are holding above the key area of support at around the $133.2 mark, we continue holding above the 20-day MA, continue pushing even higher, see a break above the $147.9 mark, and also manage to break above the wave 1 high at around the $165.5 mark, then there are chances that Quant might continue pushing even higher to fully maximize our target area to the upside in the formation of that wave 3. And this ABC corrective structure can only happen in case we see much of a retracement over here, and also continue losing other key areas of supports in between here. So let's be patient and see how that plays out. And also taking a look at the indicators here on the RSI, we are trading at around the 61 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 3. Also taking a look at the MACD, we have been able to print a bullish cross, fully supporting higher prices in the formation of that wave 3, and that means there are chances that Quant will continue obeying this 1-2 setup and this Elliott wave structure that I have right here. So let's be patient and see how that plays out, and I'll be keeping you updated.